just 1 minute. All right. Good evening, everyone, once again. And I'm Ajit Mishra from Religare Research. And this is our weekly webinar. So those who are connecting with us for the first time, I'll brief you about the structure, that how we're going to progress, and then we'll start with the presentation. So first thing first, we'll take a look at how the markets performed last week and what all sectors and stocks performed well, or wherein we saw that the underperformance, followed by our view on the indices, both Nifty and the Bank Nifty, followed by top stocks for the next week, which we feel have a potential to do well, and in case if the market corrects, you should have stocks wherein we may see further decline. So stocks on both sides of the markets, like long and short opportunities. So this is how this entire thing has structured. And but before that, disclosure and disclaimer that whatever we are going to discuss in this presentation is not a trading recommendation. So you should take a view from your advisor and maintain your own discretion when it comes to the stock specific ideas as well. So this is how the markets performed, after a very sharp decline the previous week. This week we saw that there's some bit of respite in the indices. Both Nifty and Sensex managed to gain over 2.5% each, and ended around the week's high, closer to 15,700 mark for the Nifty, and similarly 52,700 for the Sensex. And talking about sectors, much on the expected lines, auto, FMCG, IT, financial services, and media. So we last week we talked about auto, being the one which looks very decisive, and wherein we are seeing a very strong potential to do well. And auto led the entire rebound, followed by FMCG, of course. So these were the two sectors that we were betting upon last week. And we saw some sort of rebound in the IT pack, financial services, and the media counters as well. At the same time, we talked about metal and energy, wherein we will continue to see lackluster move and subdued move, and that is how it performed. That both energy and metal pack ended lower last week as well. And so much on the expected lines. Again, auto stocks did well, exceptionally well last week. So among the Nifty gainers, we have two of the auto names at the top of the list, like Hero MotoCorp and Eicher. Both gained over 10% each, followed by HUL, Maruti, and M&M. So out of 5 stocks, we have 4 auto stocks, among the top gainers in the Nifty 50 last week. So that clearly shows the kind of outperformance that we are seeing in the auto space. Now coming to the losers, Tata Steel led the decline, followed by UPL, Reliance, Nalco, and TPC. So again, here we can see that energy and metals, they're the one who were the culprits, which kept the upside in the markets. So this is the overview and what happened in the market last week. Now, what do we anticipate and what do we expect from the market next week? So this is the graph of the Nifty index. So last week we discussed about that Nifty, after breaking this March low, I hope that you can see my cursor here, this level would find it difficult to reclaim that zone. So initially, yes, for a couple of days we saw that Nifty remained in a very narrow range followed by an attempt to recovery, but it couldn't sustain. And then, again, we are seeing that Nifty is hovering around that level. So what it indicates is that, I'll just show you this, complete analogy that what we are discussing here. So it's not that markets moves in a single direction, and, there's always a move or a contra move or a counter move that we say when we move in a trend. So this is the broader trend, like, that we are seeing Nifty making lower highs and lower lows. But within those broader trend, we are seeing, counter moves. Counter moves means though the overall trend is negative, but we are seeing respite, we are seeing the rebound. At times it's very sharp, at times slightly on the lower side. And that is what we are seeing this time also. So after declining from this 16,800 to 15,200 zone, we are seeing a rebound now. So what next? What is next for the index? So what we are observing is that though Nifty is attempting to reclaim this 15,700 zone, that is the March low area, because usually, what happens is that once we breach any important support or resistance, it's become very difficult for any index or stock to reclaim that mark. And that is what we are seeing in the Nifty also, that though it's hovering around that level, but it lacks decisiveness. We are not seeing any decisive move around these levels. So what it indicates is that the bears are still under control. We are seeing recovery in the global markets, which is fueling some rebound in our markets as well. But the conviction level is still low. So that is why we are facing this resistance around 15,700 levels. So for the next week, what we believe is that even if we manage to sustain around 15,700, the upside seems capped in the index, considering the overall trend. The overall trend is still negative, and in case if we see some rebound from the current level, 15,900, you can see this yellow line, in the chart. This area, this is 15,900. That could be the area basically where we have the next major hurdle. And then this gap zone closer to 16,200. So, in technical analysis, we assume that usually the gaps are filled. So this gap, this zone 16,200 to this next day we opened the gap down. And so this area is something that market might attempt to fill in case if it surpasses 15,900. So we have the two critical resistance areas for the next week, 15,900 and 16,200. This is the resistance. So as you said, the trend is down. So we'll definitely look for resistance first. Downside, for the bears to regain control, Nifty needs to break this zone of 15,350. In that case, the move would reverse again. And then we can see the Nifty drifting towards 15,000 level also. So probably this could be the area, this zone wherein we have seen recent consolidations. That is 15,350. Below that, we can see bears again regaining control, and then situation deteriorating, and Nifty making a newer low towards 15,000 level. So this is how the chart is currently portraying the picture. So just to sum it up, there is no clear direction in the market right now. Earlier, we were like seeing, that after every, swing, we were seeing some sort of consolidation. So that is the kind of consolidation that we are seeing right now. And we need a decisive breakthrough above 15,900 for a move towards 16,200. On downside, 15,350. That is something that one should keep a close eye on. So this is something that we likely to trade in the near future. Now talking about the next index, this is important. This is critical. Banking index we are discussing here, because banking and financials put together have a weightage of around 38%. So banking performed well. In fact, I would say exceptionally well. In comparison to the Nifty last week. And in fact, last week also we discussed about that banking didn't breach the March low. There was closer to around 32,000 levels. So it's a kind of a outperformance that we are seeing from the banking space, which is helping the index to hold higher, or maybe you can say the pace of decline is slightly on the back foot. So this is something that we are keeping a close watch on, that banking is still holding strong. It's comparatively stronger than the Nifty index. And, though if we talk about stocks, we are seeing mixed structure, but we believe that private banking stocks are comparatively stronger in case if there's been a decline in the banking index in days to come. We feel the PSUs might, were the one which where we may see, the retracement first. So, but talking about the index first, so this zone of this green line that you can see, this zone is 33,900 area. In case if banking manages to surpass this zone, then we may see further rebound. So, one important aspect is that though we are seeing comparatively, stronger picture in the banking index, the overall trend is still down. So it's nothing that, it's completely out of sync. The trend is down. It's just that the short-term deviation that we can see, say that we are seeing in the Nifty and the banking index. So Nifty is slightly on a back foot, wherein banking is still showing resilience and outperforming the index. That is why we have this disbalance right now. But upside, in case if it crosses 3300, 33,900, then 34,500 would be the area. Again, the same gap. You can see this zone, the gap that we have would be the area where banking index is going to face resistance. And similarly, on the downside, we need a breakdown below 33,100 area for any retracement towards 32,400. See, banking, I would say, is in a better shape. So one should not look for shorting opportunity in the banking index in comparison to the Nifty. Nifty, I feel, yes, people can look for shorting opportunity. In fact, last time when we talked about that 15,500 to 700 could be the area where people should look for shorting opportunity in the index. It made a very strong attempt one day, and that is what the indications were, that it might surpass that level decisively. But the next day we saw a very sharp decline. So similarly, we expect the similar kind of a move around 15,900 to 16,200 zone. That could be the higher base now, in case if Nifty surpasses 15,700 decisively. But banking, I would recommend not to go short in, considering the structure is still on a stronger side, and we'll look for decisive signal. So anything below 33,000 could be the area basically where we may see a retracement towards 32. But the major decline would come only below 32,000 level, not before that. So banking is something that one should avoid for shorting position unless we have a decisive close below 33,000 mark. And similarly, when it comes to the stocks, the banking pack stocks, PSUs definitely can be considered for shorting opportunity as and when we get it. And private banks should be preferred when we look for the long trades. So that is something that one should keep in mind, that Nifty, yes, we can see sell on rise approach continuing, even if it reaches to 15,900 zone, 16,250 zone, because the trend is down and we are not seeing decisiveness in the market so far. But banking is comparatively decisive, so one should avoid positional shorts in the banking index at the current levels and wait for some sign of reversal signal to initiate fresh shorts. Now comes the stocks part. So again, one sector that has been doing exceptionally well and which is on our radar for almost a couple of months now, and we have been extremely vocal about this also, that we have several recommendations running in Religare. So one stock is Eicher Motor. So you can see this, this is the weekly chart of Eicher Motor. It's in quite a period that we can see that last it made a high of close to around 3,000 mark, and after a prolonged corrective phase, and now we are seeing this consolidation continuing in this range of 2,300 3,000 zone. So M&M, Maruti, Hero MotoCo, TVS, they have done exceptionally well of late. In fact, Eicher have also gained, in fact, it was among the top gainers in the Nifty last week. So we believe this range that currently we are seeing the stock is trading in 2,300 to 3,000. it might attempt a breakout in the near future, maybe next week or after that. But there's a strong possibility that we can see a very strong up move above 3000 level, and in that case the stock may move towards 34,000-3500 levels as well. So this is something that one should keep a close eye on when it comes to the auto pack, because all the other stocks have done exceptionally well. They are still doing well, but here we have a fresh trigger above 3000 mark that one can keep a close eye on. So this is one from the auto space. So largely, I hope that it's making sense that we are focusing on the sectors first and then talking about the stocks. It's not the other way around. So sectors wherein we are seeing strength, we are looking for buying opportunity, or stocks which are looking comparatively stronger. And similarly, it goes for the bearish stocks. Now, the other sector that we like is defensive, FMCG and pharma. So though we have multiple names to choose from, but one stocks which attracted my interest is Star. It's an underperforming counter within the pharma space. But now, from the last couple of weeks, we are seeing exponential rise in the volumes. So what this indicates is that after a long period of correction, this move shows a corrective phase. Like from, in fact, it's much severe than what shows in chart. But even if we consider this period, it's almost half that we have seen from 600 to 300 zone, the stock retracing. So, but now we are seeing a very strong base formation with noticeable rise in volumes, and plus a breakout on this candle, then in today's candle as well. And kind of volumes, look at the volumes, that it may be like average volumes 2 times 3 times of the average volumes. So that shows that the stock may attempt a reversal, a short-term reversal, and it has a potential to retest the previous swing highs closer to around 380 to 400 plus zone in the next week, considering the kind of quantum that we are seeing in the stock. And this move would negate in case if it again breaches this 300 mark. So this is something that one can keep in the watch list for the next week. So Star from the pharma space. Now comes the stocks which are looking weak or bearish to us. So this is a bank, Bandhan Bank. Though we were saying like the bankings are doing well, the bank Nifty is outperforming the Nifty, but we have few exceptions also. So Bandhan Bank is the one. So you can see it's a weekly, it's a daily graph for the Bandhan Bank, wherein the stocks was under consolidation for quite a period, and then it made an attempt to cross this line, declining trend line here, for a breakout. Again an attempt, but it couldn't sustain, and off rate it shoved very sharply lower. And this time around, the trend line that we have from the bottom, it breached that mark and currently hovering around that area. So in case if the market corrects, so this stock could potentially be an underperformer, or wherein we may see further selling pressure in days to come. So make sure that whenever we talk about shorting, avoid stocks which are trading at the record highs. Look for stocks which are in downtrend and wherein we have some sort of negativity continuing for a long period of time, and we have just seen a rebound or a respite, not the stocks which are trading at the record highs. So it's not a great strategy to work upon. Always look for weakness when it comes to short. So Bandhan Bank is one such stock within the banking space, though the banking looks comparatively stronger, but Bandhan looks weak to us. Now the final stock in the list, Coal India. So energy is one sector apart from metals wherein we are seeing pressure, and we expect this negativity to continue ahead as well. And Coal India is basically reflecting the same trend. See, it tried to make an attempt to retrace the previous swing high close to around 210, but it couldn't sustain around 200 levels, and now we are seeing a retracement. This recent pause, off late around the 185 to 175 zone has resulted in the formation of a fresh shorting pivot. So there's a possibility that it might retest this red line and a trend line, which is long-term moving average plus the rising trend line, and maybe lower in days to come. So close to around 165 or 160 level could be the area that Core India may test. So importantly, though the market structure is weak, but mostly stocks are they like they are beaten down badly already. So we are not seeing any major opportunity to go short in, or maybe we have seen some sort of reversal in those stocks. So make sure that when we are shorting in the market like this, even the IT counters, like of late we were seeing that the IT majors doing exceptionally well, but a few of the mid cap IT names, they are still struggling. So again, when it comes to shorting, especially in the market like this, wherein we still have resistance in the index, so wait for a decisive signal and look for the opportunity wherein we have room, like sectors which have already are in the correction mode, stocks like metals, like energy, and avoid shorting in auto. Obviously, we are very vocal about this, that dip is a buying opportunity when it comes to auto. And be it Eicher, be it Hero MotoCorp, Maruti, all these stocks are looking very strong. So avoid going shorts and look for the buying opportunity when it comes to the sector approach. And auto, FMCG, pharma, these three should be preferred when it comes to the long trades. So this is something we wish to share in this presentation. So I'll just summarize what we have shared and what we have discussed so far is that Nifty, we still have multiple resistance to cross and sustain to make any sign of decisive reversal. So first we have 15,700. If it manages to cross, then 15,900 and 16,200. So next week, 15,900, 16,200 could be the area basically where Nifty is going to face resistance. The buyers would again come in the favor of bears if it breaches 15,350. Then the next low could be close to around 15,000 mark. So this is something that we are talking about for the next week itself. Banking comparatively stronger. So avoid shorts, positional shorts in the banking index for a time being now. We need a close below 33,000 mark for any fresh shorts in the banking index. But yes, on the stock specific front, banking may we like private banks more, and PSUs, will look for a shorting opportunity instead of going long, even if the banking moves with a positive bias ahead. And Bandhan Bank, of course, that which we have discussed among these stocks, which looks weak to us from the banking space. And on the positive side, we like auto, we like pharma, we like FMCG from the auto pack. We discussed about Eicher Motor. From the pharma, we discussed about Stride Arcode, which is STAR. And on the negative side, we discussed about Coal India and we discussed about Bandhan Bank. So this is the entire, view that we have for the next week with the indices and the stocks as well. So what we'll do next is we'll conduct a small poll and please share your feedback through this poll. And then we'll begin with the Q&A session. You can put your question in the chat box, but only the questions which are prevalent to the topic that we have shared. We are talking about the indices. I'm okay answering the questions related to both Nifty and Bank Nifty and the stocks that we have discussed. No individual stock specific queries, please. Okay, so that would help and that would save time for the others as well. Please quickly fill this poll so that we can start with the Q&A session. And meanwhile, in case if you have any questions, you can put in the chat box. Make sure that whatever we have discussed in this presentation, we are restricting our questions to those indices and stocks only. See, no stock specific questions, please. I've requested earlier also. Anything related to the indices, in case if you want to know more about it, I'm happy to respond. And anything related to the stocks that we have shared. no stock specific queries, please. Please quickly fill this feedback first so that we can start with the Q&A as well. All right, so we will start with the Q&A session. In the meanwhile, you can fill this feedback as well. And okay, so Kumarsan Babu have asked, is 15,800 to 900 is a major resistance? So yes, Mr. Kumarsan, that is what we have discussed, that 15,900 rather is a critical resistance area. In case if it breaches the same, then we can extend the move towards 16,200. So that is what we are eyeing for the next week. I guess, Mr. Ajay Moria, you were asking about Nifty Reality Index. Yes, so Nifty Reality Index, in fact, I'm also keeping a close watch on, and I feel that this index has a potential to witness a recovery or a rebound. Though reversal is still not there, but selectively, like today, we have recommended to our clients Syntech Reality from the reality space. So yes, selectively we do find few stocks from the reality space doing well. But majority they are still under pressure, and we are not seeing any major sign of reversal. So there could be some rebound, but yes, it's comparatively in a stronger state that we may see a reversal in days to come. Ganga Devi ji, this is what we have shared when it comes to automobile. We are very strong, we have a very strong view on automobile. That, in fact, just to share this, why we are very much vocal about the automobile sector is that this is among the few sectors, and in fact, it's the only sector right now which is trading at the record highs, closer to the record highs. So while most of the sectors are reeling under pressure and they are way below their 52-week high, this sector is trading at the record highs. So this shows the kind of outperformance that we are seeing in the automobile space. So from the automobile, as we have discussed, that Aisha looks strong to us. Then we have Maruti, then we have Hero Motoko, wherein we may see fresh momentum continuing. Manjeet ji have asked for any impact in the bank fraud. So I guess, Manjeet ji, you were referring to the news that we had of late related to DHFL and all. So we, don't see any major impact coming on the indices, because this news has been there for last several months. So it's something that market have already discounted. So IT index, Gayatri Investment has asked for this. So IT index, yes, we are seeing a little bit of relief, but again, it's not completely out of woods. So something that we are keeping a close watch on. Though TCS has recovered very strongly last week. In fact, some of the other IT major names also did well, but we are not seeing a decisiveness in the IT index so far. So wait for a decisive signal when it comes to the IT index, and selectively, yes, you can start nibbling when it comes to the IT pack. But when it comes to trading position, maintain extra caution and maintain very strict stop losses. Yogesh Chaudhary ji, we talked about Bank Nifty in detail, that banking looks comparatively stronger than the Nifty, and one should avoid fresh shorts at the current levels. We should see in case if it witnesses any kind of weakness in days to come. So 33,100 is the area basically where we are seeing. Below that, it may witness fresh, negativity going ahead. For supports in the Nifty, we have the zone of 15,350 and 15,000 for the next week. It was a question from Mr. Ujjal Saha. And Vinod Gugle. So option strategy, see, again, as I've started this presentation with the disclosure disclaimer that we are not sharing any recommendation. I'm just sharing my insight, my views. On the basis of that, you can use your own discretion. If you're associated with Religare, obviously you can get in touch with your, relationship managers, your business partners, and they'll assist you in that. Yes, Daulat Khan have asked a very important question that though the auto sector has been outperforming, but why the Tata Motors is not participating? So the reason is that the performance, rather the outperformance that we have already seen in the Tata Motors is keeping the stock slightly on the back foot these days. But it's not that the Tata Motors is underperforming. If you see the move in the last 2 years, it have outperformed majority of the auto counters. It's a kind of like a consolidation that we are seeing right now, and that's why we are avoiding Tata Motors in the list as well. No stock specific question, please. See, again, please restrict your questions to the equity market and indices that we have discussed about, Sirijit. Yes, this is something which is very important and very important question that Mr. Ajay Maurya have asked. So, what he has asked is that in this uncertain markets, should we keep our paying our SIP installment because all the mutual fund portfolios are in loss? So, Mr. Maurya, in fact, for all those who have invested in the market in the last 1 year, might be facing the similar situation. But honestly, one thing which as an equity investor you should know is that 1 year time horizon is way too low when it comes to equity market investment. So what data says is that in case if your time horizon is 3 to 5 years, you will definitely make money when it comes to the equity market. This is what data says. It's not that something that hypothetically I am commenting. That most of the occasion that 3 years return basis and 5 year return basis, equity market have decent returns for the investors. But in case if your view is very short term, like 1 year and less than that, we might continue to see this kind of pressure. So I would strongly recommend that in case if your time horizon is 3 years, and in case if you can extend your time horizon to that zone, you should continue with your SIPs and don't get disheartened by the recent declines. We are a strong economy. Is just that with few things falling in place, like crude again retracing, inflation coming back to the normal zone, and the kind of resilience that we are anyway seeing in our markets, there is a possibility that we'll do well in next 2 quarters. So yes, I would recommend you to continue with your SIPs with a time horizon of at least 3 years. So Mr. Shah have asked that is it safe to take delivery in the mid-cap company? So delivery buying or anything which is related to short-term trading, Mr. Shah, I would recommend maintaining stop losses. Markets are not completely reversed yet. So we are just seeing a rebound. In fact, we are accordingly, advising our clients also. So today, just for example, we have recommended long in Asha India. We have recommended long in Centec Reality. So these are mid-cap and small-cap counters. So it's not that we are not referring to the buying opportunity in the market like this. We do recommend to our clients, but with the stop losses, which one should adhere, especially in the market like this. And otherwise also, when it comes to trading, we can't think, without stop losses. This is something that we have area, that is how we minimize our risk, and we have a capital for the next position. So please think in that ways instead of that not booking a loss is something that is a strategy. So this is something that, especially when it comes to trading, do maintain a very strict risk management rule in place. Auto index, I'll not talk again. We have discussed in detail. We are very bullish and we maintain that bias. Metal index, Gayatri Investment have asked for this. So metal index, though we are seeing a little bit of pause, the trend is still down. We still have around 5 to 7% kind of a decline possibility from the metal space. So metal is still in a void list, and next week, in case the market corrects, metal, PSU banks could be the one wherein we may see fresh decline. So now stock specific questions, please. IT, we have just talked about, Mr. Tola. Manjit ji, we have just discussed about metal as well. So avoid longs in metal. So Mr. Dinesh have asked that those people who have bought into the higher level and they are stuck. So see, one important thing is, again, I would repeat, is that if it comes to trading, you should maintain stop loss. If it's investment and it is on the basis of fundamental rationale and the qualitative approach, then definitely you should look for adding opportunity when it comes to the stocks correcting, because what we are seeing right now is correction across the board, irrespective of whether the fundamentals are sound or not. Yeah, in some cases the retracements are comparatively lower, but we are seeing retracement across the board. So in case if the stocks are fundamentally sound, you can definitely recommend your clients to add more. IT sector, we have already talked about, Pooja ji. Media sector. So media sector is something that one should avoid. In media, we have very limited stocks, Z, Sun TV, and the entire space is not performing well. But yes, if I see that, if I'll add rather PVR and Inox into that list, so they are definitely portraying a very strong picture. So other than that, please avoid the media pack. So we have one question from Mr. Neeraj regarding the markets, that do we see further decline? So that is what we've discussed, Mr. Neeraj, that when it comes to Nifty, yes, there's a possibility that we might inch lower, because we are not seeing decisiveness in the market right now. Though we are seeing an uptick, market managed to gain nearly 2.5% last week, but we are not seeing decisiveness at the higher levels. It's just that the global markets are recovering, the US markets are witnessing a rebound. That's why we are seeing some sort of respite in our markets. But for any decisive reversal, we still don't have any sign for that at present. So we have to see how the markets perform. But as of now, for fresh decline of for bears to regain control, Nifty should break this level of 15,350. Below that, again, we will see that the market would again would face pressure next week. Snehas, we talked about IT index multiple times. Oil and gas sector, energy, Vinodji, we have discussed that energy, we are slightly looking for shorting opportunities at the current level. Reliance, in fact, yes, this is something that I'm sure that would benefit the larger audience, that Reliance have not participated in the decline so far, but now we are seeing some sort of profit taking or a decline in Reliance. Last week, it breached an important trend line and also tested the long-term moving averages also. So that indicates that either it will trade sideways or negative. We are not going to see any major respite in Reliance in the near future. So that is something that market should will definitely be keeping a close eye on. So Pashupati ji have asked for telecom sector. So that what is the impact of the 5G spectrum auction? So I don't see any major impact in the near future, because this sector have performed well. The recent consolidation that we were seeing after the entry of Jio. Now we have two major players, Bharti Airtel and Jio, that are in place. And Bharti Airtel, with the disclosure and disclaimer, we have a very recommendation running, strong high conviction recommendation that is running under Bharti Airtel, and we are very confident about that. So I'll not talk about individual stock, Mr. Vinod, as I've just shared my view on Reliance, just to answer the energy space. So I'm sure that would help you to give the answer. So Gayatri Investment have asked important questions related to crude, how it impacts our market. So crude, the rise in the crude is negative for equity because we have, multiple sectors at the same time, we import 80% of our requirement. So the import bills goes through the roof when it comes to the crude, inching higher. So it's not good for our economy. It's not good for the companies like paint, tires, which they have the crude as a raw material. So all these sectors get thrashed. So that is what we have seen of late. In the paint sector, in the tire sector, stock like Asian, Berger Paint, they all were down and out. So power, Mr. Yogesh, one should avoid right now. We are seeing mixed trend, and energy, it falls under the same bracket. So one should avoid power stocks. In fact, Tata Power, which has been doing exceptionally well, have seen a breakdown of late. So we might see further underperformance in the power space. So NTPC, Power Grid, Tata Power, they all fall in the same category. So we are not seeing any major decline though. Except Tata Power, there could be a possibility that we might see some follow through move and a decline in days to come. But other stocks, they are likely to consolidate in a range. So, all right, we have answered all the queries, and yeah, so thank you everyone for joining in. And next week, we'll join with a rollover report that we release after the monthly expiry. So that my colleague Mano is going to address that session. So yeah, goodbye for now. Thank you everyone.